A lack of clarity as to whether banks should peg interest rates on loans on the central bank rate or the Kenya Bankers Reference Rate has seen banks use the CBR, which is currently 10.5% as their reference, higher than the KBRR, which is at 8.9%. Kenya Bankers Association Chief Executive Officer Habil Olaka says, though banks are waiting for resolution of the matter by the courts and the Central Bank of Kenya, by Wednesday next week all banks will have complied with the new Banking Amendment Act.
The law talks about a base rate set and published by the central bank. And currently, in the absence of that rate that has been set and published by the central bank, and given that the public was already anticipating the benefits that are accruing to the borrowing public, I think banks had to act proactively and pass on that benefit, even as you wait for clarity to come. You see, at the end of the day, before the clarity became, it was an issue of you have to pick one. And it's a number of banks I've seen have decided to use the CBR meanwhile. It's not that all of them have come forth and said they're using CBR, but those that have come forth, I think most of them have indicated they're using the CBR. And it's purely their own individual decisions.
With the law requiring that only new loans will be capped at 4% above the central bank rate, Olaka notes that customers with existing loans also benefit, as various banks have decided to extend the favor.
The law is quite clear in terms of how it's worded. How it's worded, if a bank was to strictly go as per the way the law is worded, they'll apply it only on the new loans going forward. But as I mentioned earlier, I think banks have listened to the concerns that were raised. The public had expressed a specific wish of the fact that the rates in the banking sector are high. The President, in his memo to when he was assenting to the bill, he also clearly mentioned the fact that there's concern from the public, and that's what he has listened to. Politicians, when they were passing the bill, they were quite vocal in terms of the fact that the cost of funding was high in the market. So the banks cannot be effectively deaf to that message of the fact that, the cost of credit is high in the market. And that's why, irrespective of what the wordings of the law say, they are passing that benefit on to the existing consumer.
With Kenyan banks currently facing increased competition from international banks, Central Bank Deputy Governor Bijiwe has called on local banks to increase their trust and customer confidence, which she notes is still low in the country.
To determine the success or failure of the banking sector in Kenya rests on customer trust and confidence. I repeat, it rests on customer trust and confidence. We need to regain it.
At the same time, Bijiwe says that the central bank is working on a strategy that will see banks register their title deeds, T-bills and bonds. Other CBK's registry to enhance borrowing between small and large banks, as well as increase liquidity.
Prepared for title deeds. Similarly, Central Bank would like to do one for the assets that it holds on behalf of others, or others have deposited with us. So, for example, T-bills and bonds. If a bank purchases T-bills and bonds, they can put it in our registry. That means they can borrow and lend between each other, and that collateral is secure in the registry at Central Bank. So if there's a problem, then Central Bank will interpret whatever the registry rules are and be able to compensate that party that had lent the money. In this way, what you find is that you can do very short-term lending immediately, in a very quick time, at a very low cost.
They were speaking during the 5th Annual Banking Research Conference. Nicholas Ndwati, Business Defined.